Welcome back to Investing Talk Podcast. Today, we're focusing our attention on Freeport-McMoRan, a major international player in the metals industry, primarily focused on copper, of course, but also with significant gold and molybdenum operations.
That's right. And for this exploration, we've gathered quite a bit of business and financial overview, a detailed due diligence report, and also their most recent financial and operational update.
Okay.
Our goal really is to understand this company's core business. How they've been performing lately, their financial stability, and, well, what the future might hold.
We want to give you a clear and comprehensive picture. We're going to be looking closely at how they operate, their recent Q1 2025 financial results. That includes revenue of, was it $5.73 billion?
That was actually down 9.4% from last year.
Right, down year over year. But it actually came in ahead of what analysts were expecting, by about 4.8%, I think.
A decent beat on the revenue line, yeah.
We'll also discuss their net income. That was $352 million, which is a 26% year-over-year decrease.
A bigger drop there.
Definitely. And we'll talk about what all these numbers signify within the broader market in the metals industry. So maybe to kick things off, for those tuning in who might be newer to this company, what's the fundamental business of Freeport-McMoRan?
Well, at its heart, it's a leading global metals company. Their main emphasis is copper. That's the big one for them.
Copper is key these days.
It really is. But they also have substantial gold and molybdenum mining operations. What's particularly noteworthy, I think, is the spread of their assets across the globe.
Okay.
They run very large-scale mining sites, like the Grasberg Minerals District in Indonesia. That's a truly immense operation.
Huge.
And they also have significant operations throughout the Americas as well.
So it's a geographically diverse operation, which, intuitively feels like it would offer some resilience, maybe?
It can, yes. Spreading the risk geographically is often a strength.
And copper is definitely the metal everyone's talking about right now.
Precisely. Copper, gold, and molybdenum are their primary outputs. The company also makes a point of highlighting their commitment to responsible sourcing of these materials.
That's increasingly important.
Absolutely. If you think about the bigger picture, these are all essential components for modern technology, for infrastructure, for the green transition.
Okay, so let's dig into their recent financial performance then. The first quarter of 2025 is behind us, and we've seen those headline figures. $5.73 billion revenue, $352 million net income. What jumps out at you when you look at these results?
Well, it's interesting that while their revenue saw that dip, the 9.4% compared to last year, it actually surpassed what financial analysts had predicted.
Right, the beat.
Which suggests there were some positive underlying factors at play, perhaps in their sales volumes, or maybe pricing held up better than feared.
Could be.
However, that net income figure experienced a much sharper decline, falling by 26% year over year. That kind of prompts an important question, doesn't it? What caused this divergence between a revenue beat and a significant profit drop?
That's a key point. The reports do give some hints. It seems their copper sales were pretty much in line with their own expectations.
Around 850 million pounds, I believe.
Yeah, something like that. But their gold sales didn't quite hit the mark.
That's right. Gold sales came in about 100,000 ounces below their projection. They were aiming for 225,000 ounces.
And they said that was due to timing.
The company attributed this to the timing of shipments. And it's important to understand, in large-scale mining, the exact timing of when a shipment is finalized and actually recorded can shift from one reporting period to another.
Right, it can slip.
So these kinds of fluctuations aren't necessarily indicative of a fundamental underlying problem, just timing.
Okay. And they also announced a dividend, correct? 15 cents per share. That's something that's always on investors' radars.
Indeed. The declaration of a quarterly cash dividend of 15 cents per share, scheduled for payment in early May, signals a continued effort to return capital to their shareholders.
Consistency there.
For many investors, a consistent dividend can be a significant factor in their investment decisions, particularly maybe in more established companies like this.
We also noted that their earnings per share for the first quarter came in at $0.24. Now, similar to the net income, that was down from the previous year.
Down about 25.6% year over year.
And it also slightly missed what analysts were forecasting by just under 2%. So that revenue outperformance wasn't enough to kind of boost the profitability as much as the market had anticipated.
This reinforces that earlier observation, the difference between revenue and net income. It implies that while their sales might have been stronger than expected, perhaps their operational costs were higher.
Or other expenses.
Or there were other expenses that squeezed their profit margins. You'd really need to examine their comprehensive financial filings, like their annual 10K report, to get a more detailed breakdown of their cost structure and operating expenses.
Which brings us to their overall financial health. These quarterly results give us a snapshot, but what can we infer about their broader financial standing?
Well, what's interesting to consider here is the direct relationship between their financial well-being and the inherent ups and downs of commodity prices.
Especially copper and gold for them.
Exactly.
Yeah.
Their revenue is naturally going to fluctuate with these market prices. It's unavoidable in this sector.
Makes sense.
We also know that their free cash flow, which is, the cash a company generates after accounting for capital expenditures, a key indicator of their ability to fund dividends and future growth that's influenced by the substantial investments required in mining operations.
Big capital costs.
Big capital costs and their ongoing operating costs. While the specific debt-to-equity ratio isn't in these summaries we looked at, that's another crucial metric to look for in their full financial reports.
And what does that tell us, the debt to equity?
It helps us understand how much a company relies on debt versus shareholder equity to finance its assets. A higher ratio can sometimes indicate a higher level of financial risk, you see.
Okay, so being in the commodity space, they're somewhat tied to the broader market forces affecting those raw material prices. That seems clear. Now, every business has its strengths and weaknesses. What are some of the key advantages that Freeport-McMoRan brings to the table?
Well, a significant strength lies in their geographically diverse asset portfolio. We touched on that. Operating in various regions helps lessen the impact of challenges in any single area.
Spreads the risk.
Their substantial reserves of copper are also a major asset, particularly given the anticipated growth in demand we talked about.
Right, the electrification trend.
Precisely. Furthermore, they've been actively focused on enhancing their operational efficiency and safety protocols. That kind of thing can contribute to improved profitability over time.
And scale.
And their large scale of operations can provide a cost advantage in certain aspects. Plus, they have a well-established reputation and considerable expertise in the mining industry itself.
Okay, that sounds like a robust set of advantages. On the flip side, what are some of the potential areas of concern, maybe some red flags for investors?
Well, as we've already discussed, the inherent volatility of commodity prices is always a key risk for a company like this. There's just no getting around that.
Always lurking.
Geopolitical factors, too, especially in regions where they have significant operations like Indonesia, are another important consideration. You need to watch that closely.
Regulations, maybe?
Definitely. The mining industry is also subject to environmental and regulatory hurdles, and changes in these areas can affect their operations and expenses significantly. And finally, I'd add disruptions in global supply chains. That can impact their ability to operate smoothly and deliver their products.
Okay, that makes sense. When we look at their position in the industry, how do they measure up against their main competitors? We saw Rio Tinto and BHP Group mentioned.
They are undoubtedly a major player in the mining sector, often recognized as a leader specifically in copper production.
More focused than some others.
Compared to larger, more diversified mining companies like Rio Tinto and BHP, Freeport-McMoRan's greater focus on copper can be both a benefit if copper prices are strong and a potential vulnerability if they're not. It depends on the market conditions for that specific metal.
A double-edged sword, perhaps.
Sort of. Their emphasis on operational efficiency and safety is frequently highlighted as a key aspect of their competitive edge, something they try to leverage.
Okay. Looking forward then, what are some of the major industry trends and potential catalysts that could influence Freeport-McMoRan's performance?
Well, the big one is the increasing global push towards renewable energy and the rapid growth of the electric vehicle market.
Driving copper demand.
Absolutely. Those are major drivers fueling the demand for copper, which naturally positions a copper-focused company like Freeport-McMoRan to potentially benefit significantly.
But there are risks, too.
Oh, yes. They also face potential headwinds. Things like evolving regulatory landscapes, particularly the ongoing developments in Indonesia. That's a big one to watch.
Right.
And the ever-present fluctuations in commodity prices, which are, closely linked to the overall global economic climate.
And are there any specific developments within Freeport-McMoRan itself that could act as sort of positive catalysts for the company?
Several factors could, I think. Their future earnings reports will obviously be critical in demonstrating whether they can improve that profitability we talked about.
Show margin improvement.
Exactly. Any significant updates on their operations, maybe progress on ongoing expansion projects, would also be noteworthy. Changes in the global demand for copper will, of course, have a direct impact.
What about Indonesia specifically?
Well, the recent resumption of concentrate export shipments from their Indonesian operations that followed the resolution of some regulatory issues, that's a positive indicator.
That's good news for them.
And also, the progress on the development of their new smelter in Indonesia is another key factor to monitor. That's a big project.
We know that Richard Ackerson has been the CEO for a considerable period, a long time.
Since 2003, yeah.
What can we glean about the management's approach and strategic direction from the information we have? Does that long tenure tell us anything?
Well, having a CEO with such a long tenure leading the company typically suggests a degree of stability and, you'd assume, accumulated experience at the top.
City hand.
Perhaps. The reports mention strategic investments aimed at fostering long-term growth, which indicates a forward-looking perspective from the management team. Investing for the future.
Finally, let's consider how the market is currently viewing the company. We noted that the stock price has shown relative stability recently. Even with those mixed earnings results, the revenue beat, but the EPS miss. What can we say about their valuation and the inherent risks associated with the stock?
Well, the relative stability in the stock price, despite that mixed report, suggests that the market is currently taking maybe a balanced view, or perhaps waiting for more clarity.
Watching closely.
Their beta, which is generally above 1, implies that the stock price tends to be more volatile than the broader market anyway. That's typical for miners.
Higher risk, potentially higher reward.
Potentially. Key risks that investors are likely weighing include, again, the regulatory environment in Indonesia and, as always, the unpredictable movements in commodity prices.
Those seem to be the recurring themes.
They are. Investor discussions often center on these factors, as well as the company's operational performance and, of course, those dividend payouts. There may also be a degree of caution among investors just due to the current global economic outlook and its potential effects on commodity demand and pricing overall.
So when we put it all together, Freeport-McMoRan's significant role in the copper market, combined with their recent financial performance, that revenue beat alongside the lower-than-expected earnings, it really paints a complex picture, doesn't it?
It certainly does. It's nuanced.
The resumption of exports from Indonesia and their ongoing development projects like the smelter, they present potential for future growth, but the inherent volatility of the commodity markets and that regulatory landscape remain crucial elements to keep a close eye on.
Absolutely. What the situation really highlights, I think, is the intricate relationship between the global need for essential metals like copper and the practical, on-the-ground realities of running a major mining operation.
So many moving parts.
There are so many interconnected factors, from worldwide economic trends down to local regulations that come into play when you're making investment decisions in this sector. It's complex.
It really underscores that complexity. If you found this insightful today, make sure to subscribe, like, and maybe leave a comment with any further questions you have about Freeport-McMoRan or perhaps the metals industry in general.
We always appreciate hearing from you.